All right, we will call to order the Oklahoma City Post-Employment Benefits Trusts for Monday, March 9th. And the first item that we have is approval of minutes.
Second.
All in favor? Any opposed? All right, the next item is to receive our monthly investment flash report, and Doug Anderson is here with Gregory W.
Thank you, Mr. Chairman. If you will turn in your board packet to these pages, our normal monthly flash report. February market performance is shown on the first page, a very colorful page showing equities positive for the month, bonds negative, long-term treasury bonds quite negative in terms of a bond portfolio performance. Even international equities performed well. It was sort of a relief rally where people are gradually getting used to lower oil prices. The European issue in some places seemed to heat up, in other places seemed to calm down, and you have the ECB talking about, continuing to talk about the largest quantitative easing in that nation bloc's history. If we go to the following page, we see preliminary performance for the 1 month period of time. Starting at the top with Loomis Sales Bond, up 1.3% while its index was down 0.9. That's significant outperformance, ranking in the 26th percentile. However, going over the last 3 months, you can see that they invested in some of the riskier securities that did well during the month over that period of time, and it dragged performance down. Looking at double-line bond, their performance is above benchmark for both periods and ranking in the top quartile of its peer universe. You look at Lord Abbett high yield, positive returns. As in the equity markets, in the fixed income markets, risky assets performed best during the month of February. However, during the 3 months, not so good. We like to look at Lord Abbett's long-term results versus the benchmark, very close, but in a risk-managed way. These returns are, of course, net of all fund-level fees. And then Hoisington are hedged to strong or poor equity market performance, did the exact opposite of what the market did. When we look at the allocation here, the target is 3%. It is a measured approach to this portfolio. If we look at the last 3 months, as interest rates rose, performance not so good, but if we look at the last 3 months or the trailing 12 months, the 1 year, how good performance for this portfolio can be. Again, it's a measured approach. Most of the fixed income assets are in the top two, the less risky, the high yield bond portfolio adds yield to that, and then the Hoisington portfolio adds yield and also some risk mitigation to the equity portfolio. Equity portfolios, good absolute returns during the month. Dreyfus appreciation was up almost 6%. 3 months, you can see performing okay, and over the last 12 months, up 12%. Delafield, which we're going to talk about in just a moment, and what we're going to do with those assets, above benchmark during the month, so we had that, but we are going to be making a change here. Causeway, Stevens, the small cap manager, showing very nice improvement on the month, up 7.4%, and Causeway, 4.7%, as some of their holdings in Europe and some of their non-developed markets holding dragging short-term performance. So for the month, for the total trust itself was up 4%, which we think is a fantastic result, and one that, frankly, going into February, we would not have expected. Happy to take any questions.
All right, thank you, Doug. Are there any questions? Can I get a motion to receive the monthly investment flash report? All in favor? Any opposed? All right. Next item is discussion and consideration of additional asset allocation. We had a couple of issues that we had discussed in investment committee, and Doug, I'll let you present those.
Sure. We talked about the domestic equity portfolios, the large cap and the mid cap. We are aware that it is difficult to select mid cap and large cap managers to outperform the market. However, we think it can be done. We want to take a bit more of a risk-measured approach to that, keeping in mind the capital preservation is very important to the trust. On the large cap portfolio, we are proposing to take the existing allocation, that is wholly invested with Dreyfus appreciation, split that in half, and invest the other half of that portfolio in the Vanguard 500 index fund, which is the lowest cost, best tracking index. We are suggesting doing something similar to the mid-cap portfolio after extensive review of candidates, of active management, and then looking at what an active and passive combination looks like. We propose taking the mid-cap target allocation, leaving it where it is, which is 12%, but splitting it 50-50 between the current 50-50 between a new active manager, Hotchkiss & Wiley mid-cap value, and a Vanguard mid-cap index fund. Again, low cost, very good tracking. Those targets, while not written in the investment policy, we're not going to split out active and passive, but it will be maintained at a 50-50 basis. And whenever there's cash coming in or cash coming out, we will always seek to rebalance to 50-50.
Okay. I'll take those in the form of a motion. Let's do them separately, if we can, and do the large cap first. So someone want to make a motion on the large cap with the recommendation from Doug that we would keep the allocation the same on the large cap, but split between Dreyfus and then the Vanguard 500 managed fund or index fund. Second. All in favor? Aye. Any opposed? Great. So then on the mid cap,
I'll move that we select a new active manager, Hotchkiss & Wiley, along with the Vanguard index fund, and split those 50-50 for the mid cap.
okay. All in favor? Any opposed? Okay, thank you very much.
That's a good question here. Is it worthwhile for us to discuss a contingency plan in the event that the Hotchkiss Fund openness is not available to us?
That is an excellent idea. And I think that the natural idea contingency plan is to go with the American Beacon Fund.
I will move for the alternate in the event that Hotchkiss & Wiley is no longer available at the time we intend to make the investment, that we substitute that fund with American Beacon.
Second.
All in favor? That makes sense. Okay.
That would be great.
To make the change.
Thank you very much for that suggestion.
Okay. Thank you, Doug. Appreciate it. Next item we have is approval of the amendment to the audit contract to provide audit services for 2014-15. It's staying with BKD. It's the same audit firm that we have for the rest of the city and our trusts. Could I get a motion? All in favor? Any opposed? Next item is item 6, is acceptance of the interim financial reports for the 6 months ended December 31st, 2014. We have we have Mitchell Massey, man, sorry, brother, with Accounting Services here to present this for us.
Good morning. I would like to start by directing your attention to page 3. The changes in net position reconciliation, which is a replacement page you have received. The numbers in yellow have been updated. Currently, the trust is reporting net position of $36.76 million. This is an increase of $6.43 million over prior year, when net position was $30.33 million. Overall, the financial position has improved during the year. For the fiscal year, the trust gained approximately $2.69 million. Of this, $737,000 is from investment loss, offset by $3.29 million from excess employer contributions and net assessed revenue of $180,000. Next, I would like to direct your attention to page 6, the statement of changes in planned net position reconciliation. Additions are reporting at $15.9 million versus $16.9 million in the prior year. This is mostly due to contributions being up, offset by a decrease in investment income. Benefits paid were $13.13 million, which was a slight increase from prior year, which reported $12.87 million. Next, I would like to direct your attention to page 10, the asset allocation guidelines. In our asset allocation guidelines, fixed income securities were reporting at 24.9%, leaving the remaining to equities at 75.1%. If you look above on page 9, money markets used to pay claims are reporting $9.03 million compared to the prior year of $2.4 million. The increase at December 2014 is related to the timing of investing the money. As of February 28th, money markets are reporting $3.1 million. Are there any questions I can answer regarding the financial statements?
What do we target on the money market, Bob, as far as the cash?
Just rule of thumb in the past has been about $3 million.
Okay, so it's right in line with where we
Yep.
want it. We usually keep that.
It's right in line.
Okay.
Thank you.
I'll second, but I would recommend that we say as amended on the floor. Second.
Are there any reports or comments from trustees or staff?
Just wanted to mention that we had a great investment committee meeting.
It's very good. And Doug, thank you for being here and helping us with that. Appreciate everyone participating. That was good.
We really enjoy that discussion. It's stressful to make the decision, but we enjoy not only the education, but the openness of the discussion.
If I may?
Yes.
Your group behaves like you're trustees of a much larger fund, I have to say. Without some of the schisms that you see, I really enjoy the conversations that we have. There's not an easy discussion, and there's not any type of immediate consensus, and it's that back and forth, I think, that makes good decision-making happen. So it's a pleasure.
We appreciate your time with us. One of the things we were discussing is that in the future that we'll be discussing scheduling another investment committee, that periodically we do the educational committee meetings where we just take some time and go back through some of the investments and look at portfolios, look at some of the things we need to be watching within the market as we manage our portfolio. So we'll be working with Doug to get that scheduled.
Yeah, I would entertain ideas, topics of any type that would be of most use. I mean, to me, it's very gratifying to see from where this fund came at its birth, I suppose you might say. And we were talking about we're in adolescence right now. We have a few rocky points here and there, but it's really grown nicely.
Thank you, Doug.
Thank you.
All right. Without any further information, then we are adjourned.